Today is Monday, February 27th, and we want to bring up the hero dashboard quickly, which is what you see on your screen here. And what you can see in purple is all expiration deltas that are trading. So this is put buying and or call selling in the S&P 500. That's both the SPX index options and the spider equity options. And then on the teal line here is 0 DTE. And what you'll notice is that 4015, which is equivalent to 400 in the spiders today, we've suddenly seen this big pickup in negative delta trading, which should pressure the market lower. And we want to try to capture this in real time because we get a lot of questions on, hey, how can we use this dashboard? How can we use Hero to inform us of market action? And so what you get the clear impression is that as the market and futures kind of bounced this morning, S&P opened higher and we moved to this key 400 level in spiders in particular. It's a very big gamma bar. The flow, which was bullish in the morning, and we say that because as you can see after the open, we really got these positive deltas that came in, right? When the purple line goes up, that's call buying and or put selling. We got some positive deltas in 0 DTE. So again, that teal line only measures today's expiration options. And then once we hit the 400 level of spiders, 415 the S&P, things kind of flattened out. And then again, right at that trigger point, that 400 level in spiders, things really turned much more materially negative. And so what you should see, or what we believe you'll see here in the follow-up, is that the S&P will weaken, and our target level would be SPX 4000 in that case, because what we're getting is this kind of ping-ponging, right? There's a lot of gamma tied to 400 in the spiders, and you don't want to ignore that. And there's also a lot of gamma at 4000 in the SPX. And so kind of pancaking or ping-ponging, back and forth between those levels makes a lot of sense here. And again, as long as these deltas are negative, we think it does pressure the market and weigh things down. So we're going to wait and watch this play out a little bit and keep the recording going and see what happens for the next few minutes. One of the other things we can do while we're waiting is we can actually split this out by puts and calls. So if we just flick off the all trades, just for an example, and put on the put and call, we can actually see what's happening in 0 DT space specifically. So again, long calls off the open, some long put flow. But again, as we hit 400 spiders, that put flow in particular really picked up. And this is negative delta trading. And when this line is flat, what it's telling you is that the net hedging flow that should be coming out of the call side is really not doing much, right? People are not wanting to necessarily buy the S&P as we get into that 400 spider level, but there is this desire to buy puts. And what we typically see throughout the morning is long puts, long calls, and then into the close, we'll see people unwind those positions. And that actually syncs with something that B of A put out where they said they noticed this bias where it actually seems like the 0 DTE traders, or the bulk of that 0 DTE flow, is buyers, right? And particularly in the open, not necessarily sellers. There's kind of this myth that 0 DTE is primarily selling. But when you look at the meat of things, which is what you get when you're looking at the hedging flows, you see that it is actually buyers. And this is persistent weights that continue. And you can see the S&P is kind of fading here. Let's look at the put and call flow from just all expirations, and it's a very similar story. When you look at all expirations, sometimes we think that this can be a little bit more significant to the longer term picture, because if people want to really hedge their portfolio, what do? You buy longer dated puts, right? And that would be reflected in this blue line when we look at all expirations as opposed to just 0 DT, but it's the same story. If you're long this market, you don't want to see these negative delta trades come in, because again, that is a signal that hedging flows may have to start shorting the S&P 500, which could pressure it lower. And that is really what you can end up seeing here now. Since we started broadcasting, the S&P looks like it's come down from about 4,015. We're down about 410 right now. And again, we think it's ultimately going to kind of pop down to the 4,000 level, which if you read our AM subscriber note, you would see that is a big support level, or this is this big pivot level that we're watching, because there's, again, so much gamma that's tied to that level. So again, the summary here, the price action here, and we'll try to update this in a little while, is that, with the market hitting these highs and you get these negative delta trades pressuring the market lower, you can see this unfold and you can see exactly how the market responds to put buyers and call sellers in this instance. So just wanted to give you all a quick update on what transpired after we kind of filmed that video and we gave it a pause. You can see what happened here is the market absolutely spilled lower. We moved from 4012 in the S&P all the way down to that 4,000 level, and it now looks we are getting a bounce. So here's another example. It's a great example of how you can see that big negative delta pressure building, and bam, the market drifts down into response. And then what we'll be looking for here, what Hero subscribers will be looking for, is again a bounce in those deltas, right? Or put covering, call buying, etc. That would forecast the market could catch a little bit of a bounce. So the flow here really portrayed a great chunk down, nice 25 basis point move down in the S&P.